if everyone charges all these fees to get there, then at the end your profit's so small that if there's a little slip up somewhere, then there's no profit to be made, and the person putting the deal together gets stuck holding the bag and not making any money. So I like the idea of having my
Welcome to Building Wealth Through Real Estate. If you invest or desire to invest in real estate, then this show is exactly what you need. And here's why. We all know that the number one thing that you should be doing as an investor is networking. Your network equals your net worth. But how can you use this to your advantage? Well, firstly, take notes. Listen to what the guests have to say. If you're a new investor, you can learn from the mistakes that they've made, the experiences that they've gone through, and learn how they think. If you're an experienced investor, you could see strategies that they may be implementing that you haven't thought of using yourself. Now, secondly, you may have questions, and if you do, great. Put them in the comment section down below, and this way we can be sure to get those questions answered for you. And thirdly, there's a ton of information out there, but I found that most of it is relevant to the US, and it's hard to try and take out and extract and see what's relevant to your area. So all of the guests that I'll be interviewing are Canadian investors. So if you invest in Canada, if you're interested in investing in Canada, then this show is exactly what you need. Joining us today is Mr. Nick Pentelechuk. Nick, could you tell our listeners a little bit about yourself and where your real estate business is currently at?
Yes, thanks for having me. Nice meeting you, and you pronounced my last name perfectly. So my name is Nick Pentelechuk. I own a business called Clean Cut Real Estate, and we have an in-house team of realtors. I am a realtor. We also have a contracting company that does the renovations for fix and flips or suited properties and rental properties. We have an interior designer in-house, and we also have some money partners that work with us. So we are constantly doing deals in and around the Edmonton area, and have been doing it for 11 years. We've flipped over 60 properties in that time, and we're doing our own projects of finding a property, renovating it, renting it out, or selling it. But we can either offer to work with you in buying the finished product that we put out, or we're happy to fill in the other roles of acting as your realtor or your contractor or interior designer, wholesaling. We can put our money into your project. So we're looking for more people to work with and continue to grow our business. But we take pride that we're not just acting as realtors or contractors or whatever. We have all the pieces to put a full deal together from start to finish, and that's kind of where the clean cut comes from. That start to finish, it's a pretty clean cut deal to get you to that final product.
Could we backtrack a little and just see how you got started and your journey to this point?
Yeah, so a little bit about me is that I grew up on a potato farm, and my grandfather started that farm. My dad took it over, and I I learned my work ethic from working on the farm, and they've always believed in investing in land and working hard. And through that, I learned different skills of how to use different pieces of equipment or machinery, and I really got into landscaping. So I ended up going to NAIT for landscape architecture, which is like the design of landscaping, and then started a landscape company. From there, I bought my first home at when I was 20, and rented out the rooms to others. So kind of did a house hack situation and added value to the property by landscaping it, renovating the basement, and then I had my friends renting out the rooms of the house. And then from there, when I sold it, there's a profit to be made, and I thought kind of broke into the world of real estate investing. So kind of rinse and repeat, did that a few times, and then got into full-time renovating. Worked for a guy who was flipping houses, then started a renovation company. then started flipping homes full time, and then it just kind of kept progressing to the point that I ended up getting my real estate license, and now we kind of have this team in house where yeah, we're wholesaling deals, we're buying deals off MLS, and then suiting them, putting in legal suites into the house and keeping them as rentals, or we're fixing them and flipping them, and yeah, just working in the real estate space full time now.
That just shows you there's multiple ways about getting to investing into real estate. You know, some people go wholesaling and then jump into either fix and flipping or rental properties. I mean, your journey I think is quite unique from what I've heard so far. You know, landscaping, house hacking, fix and flipping, getting your license, and just taking it from there. Currently, like on a personal level, what strategy or strategies are you pursuing?
So we pursue a lot of different strategies, and it's hard to say. Like a lot of investors, when I talk about real estate investing, they say like, "What is the biggest moneymaker? What's the best strategy?" And I think it's dangerous talking that way, because I think through everything there's pros and cons. So instead of saying this is the best or this is the worst, I think that there are pros and cons to each, and so I try to take advantage of the pros of each scenario, and benefit from those where I can, and not just focus on one strategy. But my biggest strategy is mitigating my risk and hedging my bet. So trying not to just look at the upside potential of a property, or like the big amount of money that could come out of a property. I actually try and look at it from the other way of, how am I not going to lose money in this property? How am I going to make sure that the investors or the people that I'm working with aren't losing money, and how are we going to make this deal a success? So it's kind of a combination of um, wholesaling techniques, or BRRRR techniques, long-term hold techniques, and fix and flip techniques. And one that we focus on right now seems to be buying an undervalued property, trying to find an undervalued property that we can add a secondary suite to. We can add value to and add a secondary suite to, and then raise the value of it through that process, and then um, rent it out, have a good cash flowing product, but also put it up for sale. So then, if an investor wants to come by and buy a turnkey property, which is kind of the quickest and easiest and smoothest way to get into real estate investing, is just buying a turnkey cash flowing rental property. And if you don't want to go through the headache or the risk of getting it to that point, you can just buy a finished turnkey property from us. But as we've seen in the past couple months, like interest rates have gone up, house prices have gone up, contracting rates have gone up, and now there might not be that profit that there once was in flipping properties. So we've mitigated our risk by, if when we do this renovation, if we can't sell it on the back end for what we were hoping for, then at least we have a really good rental property that we can sit on for a while, until we find the right buyer who we can take our money out of that renovation, and move on to the next project. So a lot of legally suited homes.
Okay. Yeah, that makes a lot of sense. And to touch on what you first spoke about, I completely agree. I don't think that there's a good strategy versus a bad strategy. I also just think it's what your personal goals are, you know, your current situation, a bit of what the market's like. Um, so currently you're open to all different strategies, but this is the one that you've been gravitating to the most right now, at least, is buying distressed properties, fixing them up, turning them into rental properties, and then either selling them, or if you're not able to at the moment, keeping them and renting them out.
Well, that just seems to be the most scalable, I guess, or consistent project that we can do. But it really depends on the market too. Like, I find if it's a seller's market, then you know a better strategy, or something that we pursue more, would be wholesaling. Because if we can get something under contract, then it's less risk and easier just to pass on a home or a contract for a profit, or a fix and flip. When times are good and everyone's buying real estate, it's like anyone can make money fixing and flipping, and everyone looks like a genius. And then when the market flips like it has now, and it's a buyer's market, it's pretty hard to look like a genius or a good flipper in that market. And that's where we focus more on the long-term hold, the suited properties, and trying to figure out how to, you know, hold on to a property while creating wealth through the rental aspect. So
Makes sense. That makes a lot of sense. What process do you go about determining if a property will cash flow and if it's a good buy?
yeah, so for figuring out if a home's a good buy, I think you have to have a good understanding of what you're looking for first, and like what you're going to be doing to a property. We actually had a property under contract just this week that was $60,000 below its listed price, or what it was, the market was kind of saying it was going to be worth, or what comparables were showing. But we actually couldn't figure out how to add enough value to this property to turn a profit. So even though it was an undervalued home by numbers, or just looking at numbers, we didn't have that end game plan of showing what we can do with that. And I think that is a mistake that a lot of new investors see, is they just try and find, oh, this property is a good deal, it's a good purchase. But if they don't have the vision to know what can we do with that, or who's going to buy the end product, well, then you actually don't have a deal at all. So figuring out cash flow, figuring out numbers, like a lot of people just look at like a cash flow pro forma. It's kind of like just plug in the numbers of what the upstairs can rent for, the downstairs can rent out for, and then it's they can determine whether that's a good purchase or not. I see on a lot of Facebook groups people advertising, hey, we have whatever, this deal for sale, and investors comment under, send me the pro forma, send me the pro forma. And as soon as you send that, I just feel like there's not enough of the story of that property that you can see or tell to determine whether it's a good investment. So I guess, trying to not go on a tangent here, but I guess when you're buying a good investment, you want to look for cash flow. So that could be something that you're looking for. So you are looking at what the house will rent for versus what you're paying. So what's the payout for what you're putting into the home? So figuring that out. The second thing that you could be looking at is the appreciation of the home in that area. So trying to figure out, Edmonton's not typically known as a spot that is going to appreciate like crazy.
Yeah.
Like in BC and Ontario, you talk to investors there, they're not really looking at the cash flow. They could be losing money every month on a certain home, but that doesn't mean it's a bad deal, because that home could appreciate, 20 grand every month. It could, in a year, it could appreciate 100 grand. And that's where they're finding the good deal.
Yeah.
Where Alberta's not, or Edmonton's not quite the same, but there are certain parts of the city that you could look at where you're paying a bit more, but you see that there's more valuable appreciation in the area. So the other thing that people don't see in a pro forma always is like vacancy and repairs. So that's the other costs that sometimes are posted into a pro forma, which if you don't know what's gone into that property, then you can't really tell those numbers. They're kind of just a guess, in my opinion. So like a lot of legal suites on MLS right now, if it says it's a legal suite or an illegal suite, some investors just look at that and say, oh, it's a legal suite, so that means that you can get this kind of rent, or it's worth this much. When you actually don't know, what kind of water heaters in there. Is it electric, or is it, a power vented gas or an atmospheric hot water tank to know that electric's going to cost you way more. Do you have baseboard heaters? Because that's going to make a difference on your numbers. What's the soundproofing like? You can have a legal suite in Edmonton that was grandfathered from whatever 20 years ago that actually doesn't have any soundproofing in the home, but it's still considered a legal suite. Where today's standard, like the code has changed so that now you actually have to have sound bad insulation, res bar, drywall throughout to mitigate the sounds. And then we go even further. So I guess that's the other thing that you have to look at is that if you're working with a contractor who really focuses on these types of homes, we'll go beyond the code and do like a sonopan, or we'll double up on the sound insulation. We'll move certain ductworks around just to make sure that, in my mind, like a huge cost is vacancy. That like you could have good cash flow, but if your tenants are moving out every year, well, then that really throws off your numbers. We also change out like everything in the house when we renovate it, like the windows, the insulation, the drywall, the roof, the downspouts, the gutters, the grading around the house. We sometimes do sump pumps, or we'll waterproof the foundation walls. Like start to finish, I want to make sure that when my product's done, that I'm not having vacancy, or I'm really mitigating my vacancy to a minimum, and my repair costs. I don't want to have repairs. So all of our appliances and whatever else we put in there, we're trying to bring really good tenants to the place who are going to stay, and we hope that the home isn't going to have a lot of repairs through that time, which really makes a big difference in your cash flow numbers. So I guess, yeah, it's really, really hard to determine when you just look at on paper of what this home is actually going to cash flow, what the return is. So like the best way to know for us personally is for us internally to go in, buy a house and renovate it to our standard, to know that the costs and the things that we're putting into the home will help on those cash flow numbers. But if you're buying a property off MLS and don't know what's behind the walls, or you're not thinking about those factors, then if you just look at the pro forma, it might show some kind of cash flow number of X, but then you're finding out later that, oh no, we've had to put way more repairs, we've had way more vacancy, the rents are dropping, or some people factor in appreciation into their pro forma. I don't think you should bank on that. So it's so much more complicated than just looking at pro forma. I guess that's where it has to go back to, and you have to look at not only the cash flow, but the vacancy, the repairs, and the appreciation, and those are all key factors in determining if that property is going to make sense for you.
I definitely agree with that. You want to keep your vacancy low, because it doesn't matter if you're taking cash flow in every month and then
Putting it back.
change it over. Yeah, exactly. You change it over tenants and then you losing that again every time. As well as like you said, if it's renovated properly, you can then keep your contingencies lower as well, knowing that knowing what to expect for repairs or that sort of thing. But I want to know, when someone, so you spoke about viewing like a pro forma, and obviously that not being the be all end all in deciding if it's a good buy or not. If someone goes to go view a property, so let's say they've narrowed it down, it looks like it could meet their criteria, they go and view a property. What key things are you looking for when you go to view a property to sort of maximize that cash flow potential? Now, like you say, cash flow in itself is not the only factor to consider, but it is one of the factors. So what would you be looking at, with regards to cash flow? And then, of course, like you mentioned, all the other things to keep vacancy down, to keep repairs down, that combination, to get the most out of your property, to squeeze the most value out of it, beyond the pro forma itself. What are you looking for? Because I feel like there's an eye to that, right? As an investor, looking for things that people may not be looking for, and seeing opportunities to either renovate it in a certain way, or break it into multiple suites, that sort of thing. What key things do you look for when you go view a property?
Yeah, that's a really complicated question, and it
of course,
and it is something that has so many different factors to it, and you can't group it all together. So again, like we were saying, if you're looking for maximum cash flow, cash on cash return, I think there's, you know, some, I have to say it, some slumlords out there who only care about cash flow, and they're going into really rough neighborhoods. I know one investor who he'll go to a certain spot in Saskatchewan, and there's actually areas where you can buy homes for $30,000. There's not much to them. They don't even have a basement. They're kind of falling over, but they can bring in $900 of rent, $900 to $1,000 of rent per month. So the numbers, the cash flow, the return is unbelievable. But then you're dealing with, do you want to be that slumlord, or do you want to have?
No, but keeping things ethical, like the way you would do it yourself. When you go view a property, you're like, okay, it might not cash flow, or it might not make the most financial sense to just buy this single family home and rent it out as is. Probably better to add another suite in at the bottom, like you do, or maybe we can split this duplex into a fourplex and then increase
Yeah,
our cash flow that way. Of course, keeping the quality, keeping the standard, all ethical.
yeah,
Just like those things in mind, like the layout of the property, maybe looking for properties that have a walkout basement, and then that would be just an easier way to have less capital in, but still get that additional suite, like just those sort of things. If we're trying to do this on an ethical level,
yeah.
what are some things that you'd look out for?
Yeah, so I think it comes down to, yeah, if you have a property, like you're saying, the more doors per property, like maximizing the amount of doors, will up your cash flow. So sometimes we'll buy, well, like I said, if we buy a single family home and then add a secondary suite downstairs, now it's one dwelling to two. Or if we buy a duplex and add uh, basement dwellings, then we have a fourplex, which are now, in Edmonton, you're starting to see the sixplexes, the eightplexes and more. So it just brings your cost per door down, is what I'm finding. So that's going to maximize your cash flow. But then you have to be renovating those spaces to make sure the vacancy works, because I've heard of a lot of investors who buy the bungalow and have it rented. Then they say, oh well, I like the idea of the suited house, so then they buy that. Then they want to buy the fourplex, the sixplex, the eightplex, and as they get bigger, they're actually finding that people aren't staying around as long. Well, the reason is because you're stuffing more and more people into one dwelling, so then there's more potential of issues. So maximizing cash flow, yeah, get more doors into a building, but then we want, again, like when we do that, we want to be thinking, like I find the most success for us is by keeping vacancy low. So then separating everything, that's probably like the biggest one for us. Like no shared laundry, no shared entrance, no shared, even like some of the garages will put up wall dividers. Some of the yards, we just finished a fourplex where it was one big yard in the back. We actually put up different fences so that everyone has their own separate yard. Um,
I saw that.
oh,
Yeah.
you saw that one? Yeah, and it's worked
Yeah.
fantastically. And it's not that people can't get along. Like, I mean, that is something very important, that you want to be renting to people who are similar styles so that they can get along, but still just being able to give them as much privacy
Privacy. Yeah.
as possible. Parking, like the more doors you have, the more parking you need. So if you're looking at a property that just doesn't, some people look at a property and it doesn't have a garage and they go, oh well, we can still make it work. Well, I've found that parking can actually be like a deal breaker for a lot of people. You can have a beautiful house with no parking or no garage, and we live in Edmonton. It's just the reality that people want a place to put their car when it's minus 40 out. Pet friendly, that's another thing that we try and keep in mind to maximize the longevity. A lot of these people renting don't want to be in an apartment building because they want some kind of yard space or quick access to a yard. So how are you building the home to accommodate pets for sound and for the longevity? And yeah, I think if you can add value, I mean that's a whole nother ball game. So as like a newer investor, I would say stick to just trying to buy a turnkey property. But yeah, if you're trying to maximize your dollar figure, then trying to buy something that that you can obviously add value to, so that you can force the appreciation on the home.
Absolutely. And I like a few of the things that you said there. Like, one thing is, of course, and I'm paraphrasing, is, the cash flow isn't everything, because you have to consider like the tenant profile as well, right? Because if you squeeze the most amount of doors that you can in, what sort of tenants are you getting? And then when it comes to managing the property and all of that, those are things to consider as well. So you definitely want to be renovating, or have that end in mind in who are you going to be renting this out to. And then privacy, I completely agree with that one. I think that's a big factor in determining, you know if people are going to stay with you for a lot longer, because I know, like myself, as whenever I've looked for a place to rent, um privacy was a big factor. Like, sure, I don't mind having other people around me, but I would prefer that if I could have my own yard, or have that private space. So I think that's a big factor as well. And like you say, if you're going to consider renting to people with pets, I think you open up your market share as well. But yeah, I just wanted to see your thoughts on, like, I know that's a common thing in Edmonton, is creating a legally suited basement, um, just to sort of make the numbers work with regards to the money coming in and being able to pay those expenses, so that for the most part, if it's done right and if the market's not too bad, nothing's coming out of pocket, right? Um, but with regards to that, like, when it comes to creating legal suites, do you have any tips for people out there going to go view homes? Like, what to look for in a home, like maybe looking for a raised bungalow or a bi-level or something, so that you can have bigger windows maybe in the basement, so that it's more appealing, or walkout basement, so that there's less renovations that way. Looking for specific square footage. Like, what are some tips that people may not be considering when looking to go convert a single family home into a suited basement?
Yeah, I guess to backtrack a bit about what you were saying um, earlier is that um, when when people want to be looking at cash flow numbers or pro forma numbers, typically our finished product, if I just send you a pro forma on it, it actually won't show as it won't, the numbers won't look as impressive as, like I was saying, more of those like rundown properties or the illegally suited properties or whatever else. Um, but
Yep.
the management cost, or the like we're talking vacancy and repairs, like that cost is so much higher than what a pro forma shows if you don't have the right type of property. So I think a lot of people also, when they think of getting into this investment space, they want to try and do the renovations themselves, or do that burr project. Um, sometimes it's not as sexy when we like show a finished product and we go, "Hey, do you want to buy this?" And they go like, "No, we want to build one." And
Yep.
what you kind of the questions that you're asking, like, what should we look for? Like, what do you buy for? What do you renovate for? Well, we've done a ton of these things, and it's a full-time job for us, and we take it really seriously. So if you're gonna go buy a finished product, hopefully you're working with someone who is who's done it and cares enough about their finished product that it's not just a flip for them, if that makes sense. That they're
Yep.
not just cutting corners and putting in the cheapest things. So I think that's one advantage of kind of working with us, or working with someone who has done a lot of these, or building these. Like in my mind, I build them in a way that I try and say, like, if I was to move in here tomorrow, what would I want put into the place? And so typically that is, like we're saying, the privacy, the ways that we can really split everything up. So I typically like a detached garage in the back, so that there's parking in the front and the back, so you can separate that, separate entrances. Not a lot of people are doing this, but we are looking at 4-level splits. And the reason for that is because of sound separation, but also because the basement suite um, kind of has this stigma of like, you're a basement dweller, a basement troller, you never see light.
Yeah.
And I've seen some investors lately they're digging deeper in their foundations and putting bigger windows in the basements, which makes a big
Yeah.
difference. You know, a lot of LED pot lights, they cost more, but man, they make a big difference. And then in the 4-level splits, we're actually finding that we're buying some of these 4-level split properties where the 3rd level of the property is at ground height. So we can actually advertise once the product is finished. The upper unit obviously has the, you know, up to above grade levels, but the basement suite or the lower suite, the main level that you walk into is on ground floor, and then we either put the bedrooms or the kitchen into the lower unit into the basement, and we can actually advertise that as a main floor suite because at least 50% of the unit is above grade, which is really cool. So we find that people tend to rent for a longer time and are happier to stay in that lower suite, just because they aren't feeling like they're living in a basement. So that's kind of the biggest. There's a many different factors that I look for when buying a property, but those stand out to me the most right now. Is if the lower suite, it's typically in 4-level splits, is that we can get one of those floors at ground level or a walkout basement, like you're
Okay.
saying.
To be honest, you technically just answered my next
Oh,
question because that had to do with 4-level
yeah, yeah.
splits, and deciding if it's worth it to convert it into a duplex or not. So, great answer on that one. Another question is, do you self manage your rental property?
Yeah, we do. Our team internally does. My brother-in-law actually works with us, and he's like a site supervisor and project manager for us. And we've actually integrated, like we have a company app that works for our sub trades. It works for our clients. So if you're getting a renovation done with us, you have access to this app, and also our renters have access to the app. And how it works is that um, if they have an issue with their place, let's say a piece of flooring is loose, or I don't know, a light doesn't work, or some kind of question, they can actually just plug that into the app, which then notifies Matt, our site supervisor, and then from there he can contact our sub trades, or he can come take care of it himself. We have a cargo like working van with all the tools that we need in it, and he has his laptop set up in there at all times. So while our team can be doing renovations throughout the day, like our sub trades can be working, then we also have the site supervisor who can drive around and make sure everyone has the right tools, things are going well, and then it just allows us to be able to act as good landlords, I guess, that as soon as there's an issue that we can come kind of the next day and assess the situation, either take care of it right there or book in our trade right away. It also gives you updates of, when your upcoming bill is and what has been paid. So yeah, that's kind of what we're doing to self-manage at this point. We have 6 doors right now. Like, we're not looking to have 100 doors ever. We kind of want to
Yeah.
keep it at that spot, like having a maximum probably of 10 doors at a time, but then always having those properties also for sale so that we have some renovations on the go, some rentals on the go, and we're doing real estate as well. But yeah, that's kind of how our team takes care of our job sites, but also our renters. And if we're keeping those tenants up to date and happy with everything that's going on, then they take care of our properties, is what we found. So
Okay, that's I think that's interesting because I don't think you have to deal with as like it's not as time intensive for yourself if you have a team handling it, and if it's in house, you can sort of have it done your way. But I guess you still manage. Are you still managing the team?
I think it's a myth to say that like anything in business or in real estate investing is passive, unless like our partners sometimes. Like, money partners sometimes are truly like, we have some guys that just have money, put money in a bank account, and then we just make that work, and they are truly passive. But no, I still have weekly meetings with my team, and we have our systems in place so that I'm not having to go fix the toilet or whatever every time an issue comes up, but I'm still aware of what's going on. People can still contact me. So yeah, just since we already have the renovation piece in place, then it's that we can already add in the next piece to take care of the properties there, and then yeah, there's just kind of a huge benefit to having that built in house, and also, like, I know a lot of property managers in the city right now, maybe good with the people and setting up the contracts, but then as soon as there's some kind of construction issue, they don't know where to begin, and it's usually like calling the plumber at an odd time and getting a service call fee, and then there can be a $250 bill for like the most little fix that needed to be done, or like you're calling the electrician just because the panel, like something on the panel turned off or something. So that's what's really nice, is that we already have our interior contractors, like our electrician, plumber, HVAC. Like we have all those guys set up, and our site supervisor has that connection with them so that he can go check on things and either fix it himself, diagnose it himself, or it's like a FaceTime call with the electrician who's not charging us that extra service call. And then if we need to bring them in, then we have to. But again, it cuts down on those management calls, vacancy, and repair costs um, that so many people just factor in that we don't have as high of costs in those areas. Yeah.
Yeah, and what I meant by that is, so from the looks of it, it seems like you more would work on the business there as opposed to being in the business. You're not getting any late night phone calls yourselves, right? You sort of, there's people in place that sort of handle that, and then you focus on other parts of the business, but you still aware of what's going on. Is that correct?
Yeah, to a degree.
Okay.
Yeah, I don't want people to think that the reality is that you can just build this business and then like I can just go sit in Mexico
Oh,
and like everything
not at
runs
all.
runs so perfectly. Like
Yeah.
it's just that if you want to scale, I just found that if you want to scale, you have to be able to implement adding people to your team and implementing these processes so that you can manage those people. But I still, you know, I still know all the tenants by name and know when they pay their rent and when they don't, and when there's an issue. It just that when an issue comes up, it's not, yeah, me running out there with my drill and hammer. Sometimes it might be, sometimes it might have to be me, um, but yeah, we do
Okay.
have a team and systems in place that allow us to be the most uh, effective with our time, I guess, and efficient.
Well, speaking about managing your rental properties, what's the biggest challenge that you've had, and how were you able to overcome that?
Making sure people get along, I would say, is like a big one. I'm thinking back to one time when I rented a suite to two cousins who, I thought they're cousins, they'll get along and everything will work out. Or like a young couple, right? You just think like, oh, hopefully they stay together. You kind of hope for the best, and then
Yeah.
sometimes it doesn't always work out. So, um, if one person's on title or on the lease, what does that look like? If both are on the lease, what does that look like? If one just gets up and leaves, so um, you know, figuring out those things, which has changed kind of how I have set up my rentals, and um, sometimes it's just putting in one bedroom suites where a lot of investors don't like that. They're like, oh, that would make it so hard to rent out. Well, in my mind, it's actually you're either renting to like one single working professional or like a married couple um, that should be together for a while, but you're not. Like the more people involved, the trickier. Sometimes I found, and communication. That's my other biggest thing. Basically in all aspects of my business, but definitely with these tenants, that making sure that the tenants know that yes, I'm the landlord, but I'm also like wanting this to work out for you. I want this to be a good experience for you. So if you are wanting to have some friends over, that's okay, but just let me know. Like, or if you want to make a change of the yard or the garage or the house, or you want to paint a wall, that's probably okay. But let me know if something broke, if a friend came over and punched a hole in the wall, we're going to work that out. But the last thing that I want is to not know, or for there to be surprises, or you trying to cover something up. I just said, like, I'm going to
Yeah.
be as upfront with you as possible if you can be as upfront with me as possible. And there's just kind of a mutual respect there that I find, maybe we will get an extra call here or there of like, hey, I just noticed whatever they notice that the furnace was making a louder sound than usual yesterday. But I'd way rather have that than something sounds funny and no one says anything for a while because they don't want to bother me. So
Yeah.
um, so that's probably my biggest one. And just treating people like people, like not just looking at them as like for their money. And I said, even if you have a tough month and you can't pay rent, that's okay. Like we all have tough times in our lives. I want to work with you on that. Like we are a business, we're not a charity, so you can't live here for free. But I'm here to
Yeah.
make something work for you. So it's a people business.
Absolutely. It definitely is. Um, you spoke about this, and I also saw that you used to house hack.
Hmm.
Now, for people out there who are maybe interested in house hacking, could you break down how house hacking works? Maybe share some advice for people looking to explore that option?
Yeah, sure. So house hacking, I think is like a game changer. I think it is like a life hack, and there's two different ways that you can house hack. So one way is that it's you own a home and you rent out the rooms while living there. So you're bringing in some rental income while living there, or you can buy a home and renovate it while living there. So um, I did both when I wasn't married and didn't have kids, and I would
Yeah.
have the inflatable mattress under the stairs in amidst like a disgusting demolished house that I was putting back together. Um, just because it brings your living expenses down. If you can live in a house that you're bringing value to, that you're going to make money off of, then yeah, there's huge savings there. So I would do that. I'd renovate a home while I was living there. But then once it was renovated, I would, rent out the rooms while I lived there. And yeah, I lived with some good friends or some people I met off Kijiji. And it just brought my living expenses to nothing, right? Or I was cash flowing the home while living there, which can make a big difference in your monthly budget. I think Gary Vee talks about it, but going on the offense that so many people are focused on how to make more money when he's saying like figure out how to decrease your expenses. Like make money while
Yeah.
also living frugally even for a while, and then you can start going on the offense and investing your money. Um, people always talk about using other people's money in investment, but in my mind, it was like, how can I make enough money so that I'm using my own money so that I'm benefiting from my investment and my money's not just going to a car payment or to pay for a mortgage or whatever else. But I think house hacking, I think it takes a real ego check, and I think it's like you don't want to be telling your friends that you have the rooms rented out, or like maybe you can afford to live in a house on your own. That's okay. That doesn't mean that you're too good to house hack or too good to have renters in your house. Um, and even when I first got married to my wife, the first house that we built together, I was like, we're putting a suite in the basement. She's like, I don't want to live with someone else, and I kind of showed her how we do it and separate everything, and it's basically like you don't even know the person's living there. But it turned out into a situation where my wife's a nurse, and then we ended up renting our suite to uh, single nurse ladies, and then I'd come home and my wife and our tenant would be like drinking wine together and watching The Bachelorette or whatever. So it turned out to be a really good experience.
Yeah,
And then when we had kids, you know, now we have our own place because I'm sure my kids would be way too loud and annoying for other tenants. But we could keep, you know, the property as a good rental unit moving forward. But to get to that point, you have to take a bit of an ego hit to say like, oh, I'm gonna live with some other renters just to be able to go on the offense later on.
I agree with that. Is sure. I think it's very important to focus on the money coming in, right? Because there's only so much you can save with the money going out. But if you're not conscious about the money going out, you could bring more money in and just end up unconsciously spending more money anyway, and having that income creep. So you could end up upgrading your vehicles, upgrading your home, all of that, and not building wealth. In order to build wealth, you sort of really need to be earning a lot more than what you're living off of, and it takes balancing out both sides. And just like you touched on, if you're not a single person who's able to rent out a whole bunch of rooms in a house, you can easily then just put in a basement suite, and you can still sort of house act to some degree, where you have someone else decreasing your monthly expenses. And the more you save, the more you can then put towards investing, either in yourself or in real estate or whatever it is that's going to increase the money coming in. So I think you definitely have to focus on both, because if you focus on one side exclusively, the money's just going to end up going out, or you're not going to have enough money coming in. So I think house hackings are a really great strategy for a lot of people. Of course, you can't always, like you said, if you have some kids, if you have kids, you have a wife, it may not work out, especially if you're the suites downstairs. I mean, maybe it'll work out with a side by side. I don't know what you think about that.
It could work out. It's just you know, what are you willing? What are you willing to do? And in my single days, I was definitely willing. When we first got married, still willing. When we first had our first child, we made it work for a bit. But then after that, you know, there was a point where we moved on and could still keep, you know, the rental property there. But this, I actually think that this is probably going to be kind of the next wave that we'll see in Alberta. We saw it in Vancouver, yeah, throughout BC and Ontario, is that as interest rates are going up now and like it's becoming just too expensive to afford a home,
Yeah.
maybe instead of you know, having to sell your home and downsize to a smaller house or to a condo, then I think why not, you know, maybe refinance your house, pull out some of that equity, put that equity to work, and put a suite in your house. And then you can stay in that house, rent out the basement. As you get older, maybe your kids want to live in there. And yeah, we saw that a ton in BC and Ontario. And I think it's going to become more of a norm here in Edmonton as either house prices go up or interest rates go up or both. Because it's, you know, like we're saying, like, um, just to make life more affordable, it makes such a big difference having that bit of income, extra income coming in.
It's a great idea. Like you say, instead of, possibly losing your house and not being able to afford it or having to sell it, why not try that strategy out? I think it's also a easy way for someone who hasn't had much experience investing to get sort of like a close hands-on experience in dealing with tenants, in renovating a property. Even if you're outsourcing it, it's at your primary residence. You can have more of a handle on things. Um, but yeah, you're absolutely right. Also, is you need to be saving, and people's biggest expenses tend to be their homes, right? So if you can really cut down that expense, that's taking a big chunk out of your spending each month. So I think it's definitely a good strategy for people to consider, depending on their situation. But I've also noticed that you've dabbled a little bit with commercial projects, now more specifically multi-family. Can you speak about the experience that you've had with commercial projects and how they differ from the residential projects that you've worked on?
Yeah, we were fortunate enough to dabble in the apartment building um, model. There was a 12-unit apartment building that we did like a BRRRR strategy on, and it was more of a cosmetic. All the tenants moved out except for two, I think, and just renovated the building top to bottom, and then upped the rents, and then re-rented everything. And yeah, in those multifamily buildings, it's your cap rate that decides what the value of the property is and what the bank will give you for your lending. So a totally different game and different strategy. But I guess we were talking about this before, is that, yeah, how to maximize your dollar or your cash flow is just to own more doors per building. So um, it brought our renovation costs down, we could say, per unit, because we're repeating it 12 times, and when the painter comes, we could negotiate a better rate, or a countertop guy, or whatever else. So um, it has its different struggles of trying to figure out how to make 12 groups of people live together and work in that space. Um, but yeah, overall, really, really cool project. And the biggest thing I probably learned was how important a design and having a budget and a timeline all in place before you do the work was. Like, you can get away with buying a little project in Edmonton, like a condo or a small house, and kind of faking your way through the reno and trying to make it look nice, and then make some money on the back end. But when you have a big project like that, it's very, like, $10,000 can be gone very quickly if you don't uh, calculate enough flooring or painting or whatever, trim baseboards or whatever. So we took the time to get a good design done up first, then got the subtrades in to get it all quoted out properly off of our design, and then from there put together a realistic timeline, and then make sure that our project management was going in place to make sure that there's a successful project in the end. So after we did that project, I just saw going forward, like, I know there's a lot of people that don't use designers, or like electrical plans, HVAC drawings, layout drawings for their fix and flip projects or for their suited homes in Edmonton. But now it's like, we can't do a project without that. Um, and then now I'm hearing, like, a lot of people are doing these fix and flips right now, or their suited projects, and they're like, oh, it would have been such a good project, but we, went over budget by 15 grand, and we took an extra 3 weeks, and it killed the project. And it's like, well, I face that too, but um, we can mitigate that by just taking the extra time off the start of the project to plan things out accordingly. And I think everyone thinks they do that, but they're also so excited just to get in there with the sledgehammer, because demolition is so fun. And as soon as they get those keys, it's like, well, let's go to work. And it often ends up being that you're jumping into things without a plan, and then it ends up costing you in the end. So I don't know if that answers your question.
That definitely does. So after you did that 12-unit apartment, you sort of just changed your whole strategy and outlook for each property you had going forward.
Yeah, definitely just our project management, how we're doing project management, how we're looking at design, how we're using design. Um, yeah, all these deals come down to, like, with the contractor, if they can do it on budget and on time, that'll make or break your deal. And you have to be very confident going into that, knowing those numbers. And if you set up the project right from the start, and it's kind of this really slowing down the start to make the end go so much quicker. But
Yeah,
people are impatient.
that makes sense.
I'm impatient too, and it's like, you just want to see results. So it's like, on the first flip that I ever did, it was like, the first thing I bought was like some flooring and a new mailbox and a doorbell. I think I just went to Home Depot and was just buying, like, things that I could put in the house, because I was so excited to, like, finish it without even knowing, like, well, what is my budget for this, and how is this going to look, and what time do I want the
Yeah.
flooring to come in, or um, I used to have drywall, like, delivered to the garage before, like, right at the start of the project, and then it was in the way of other things, and then carpet was packed on top of it, and then the the contractors were getting in each other's way, and then carpet was getting wrecked, and doorknobs were going missing, and it was like we just didn't have a good enough design and plan and project management. We didn't have that skill figured out to make those projects go smoothly, and you need that on those bigger projects. So that was a good learning lesson.
And I think the fact that you started with on a smaller scale just helped you with that, because like you said, when it comes to doing multifamily, any mistake is now magnified, right? Any loss becomes a bigger loss, so you have to be a little more careful with your numbers there. You touched on the fact that with a multifamily, it's cap rate. Could you just break that down for people who don't know what it is, and how you sort of dealt with that part of the deal differently as how you would with your general single family, duplex, triplex, fourplex, that sort of thing?
Yeah, I mean, it's a similar formula that you're looking at when you're looking at just like a single family home, and you're looking at the numbers of what is the costs that are going to go, like what are my monthly costs going into this building, and then what are my what's my income from this building, and then what is that return that comes out on the end. You want to set up your single family projects in that same sense that you're cash flowing. But the banks don't look at you, like your lenders don't, or even appraisers don't look at a single family home just based on what you're getting for rent and what it costs to operate that building. They're looking at like, well, what did the house down the street sell for? So that's what your house is worth. Um, or like, yeah, what kind of finishes do you put in the house? Where in these multifamily buildings, they don't really care what the house or what the building looks like. They just care about the numbers. So yeah, so when you're doing those projects, you just need to figure out how to get the most income coming in while minimizing your expenses, which will tell you the value of the property. So you can actually have a bank come appraise an apartment building um, at certain rents, like a building just isn't renting for what the current market value is, and the bank will say, well, this building is only worth, I don't know, $800,000, and then it's a matter of the landlord going, okay, everyone, rent has gone up $100 this month, and moving forward, everyone resigns or agrees to that. Now you get a reappraiser coming in, and they're looking at the new rental rates, and oh, now the building's worth $1 million, even though you haven't changed anything. So it's just a
Yeah.
different way to get lending, and a different way that the lenders look at those types of deals.
What are some of the struggles that you faced in your real estate journey that stand out the most to you?
That stand out the most, probably consistency is a tough one, especially when you're scaling. Like scaling is so incredibly hard, and I think a lot of people jump into the real estate space, and it's scary to start that first deal. Then they do that first deal, and they go, "Okay, how do I do like 10 deals?" And it's not that when you do one deal, that the result of that one deal is going to be the same as if you have 8 deals on the go at the same time, because you have so much more like management. You're going to need more management in place and office space, more overhead, um, and it makes your risk or your reward higher the bigger you get there. So I would say that the hardest thing is being patient. I think everyone wants to be a millionaire tomorrow and wants to get out of their 9 to 5 job tomorrow, right? And I think another I think it's a Gary Vee thing again. I'm not even a huge Gary Vee guy, but I'm going back to some of his sayings today. But it's I think he says people underestimate what they can do or overestimate what they can do in a year, but they underestimate what they can do in 5 years. And I think that's really true. And just sticking to the process. So if a project goes poorly, like we want to sit down with our team after each job and go, what went well, what didn't, and how can we make adjustments moving forward, and then not being like, like I was saying at the start, it might not be that, oh, well, there's just no money in infill homes, or there's no money in suited homes, or there's no money in flipped homes. and they go, we should try wholesaling. We should get my realtor license. Like everything has its pros and cons. Everything um, has like an easy side and a hard side. And I think that you just have to take the time to learn your craft on each, like wholesaling. How can you make money in that, and when is it good and when is it bad? Flipping, when is it good, when is it bad? And just understanding each space, really taking the time to dive in and learn each realm, um, instead of just jumping from one to the next, thinking that the grass is going to be greener, um, if you try something different. Does that make sense?
Yeah, absolutely. I completely agree with that theory. And I think it's unreasonable to think that if you do something for a long enough time period that you're still going to suck at it, right? But it's been able to do it consistent enough. And like I always say, or what I believe in is that consistency beats intensity. And I feel like a lot of people think that you know shiny coin syndrome, like, hey, here's a strategy that will work. They go intensely into that strategy, but they don't go long enough, hard enough at it for a long enough time period that they can actually get the results. And before they even get to that position, they see something else. And hey, someone else is making money doing that strategy, so let's hop on to that. And you never really get good at anything. So I firmly believe in playing for the long game. I think that's where all the rewards lie, and honing in on the process and focusing on the actionable things that you can do each day over a long enough time period to get you to where you want to go to, and cutting out all the noise, because there's money to be made in all different aspects around anything. I mean, real estate just being one of them. um, if someone else is being profitable doing something else, that doesn't mean that you need to jump into that as well.
Yeah. Or getting too big too fast. People find success in one job and then they go, oh, now I'm this master. Now I'm this. I have it all figured out for fix and flips or whatever. It's like, well, you just haven't done it long enough to see the downside, because there is a con to flipping. There is a con to doing suite houses. There is a con to multifamily. And that's where, I haven't done this for 30 years, but I've done it long enough where I have seen, some times of change. And, quick story is that some investors that I was working with, they were buying suited houses with us. And, they're giving some return, but they wanted to get bigger. So then the next step was, well, we're going to buy apartment buildings. So then they buy apartment buildings and they're telling me, like, Nick, um, these things are cash flowing us like $20,000 a month. And we're burning them and pulling out, $500,000. And I'm thinking, like, shoot, like, I'm an idiot. Why am I not, like, I'm missing out. There's some kind of FOMO effect there. But then years go by and you actually see that, when times were tough, those apartment buildings actually took a huge hit. And then I was talking to those guys and they're like, we can't sell the place. We actually have it empty. We're losing 20 grand a month, in cash flow, every year. And then I'm kind of saying, well, I'm the expert. I'm the smart guy because I didn't invest in that. Where it's not the case. It's just that, over time things change. What sounds good now might not be good tomorrow, and, just being aware of the good and the bad that comes through everything. And, yeah, it's not all sunshine and, rainbows in the real estate investing world. You got to take the good with the bad, and it not just be only about money. It's that you love the space, that you love, what it has to offer, and you're not here just for the paycheck at the end of the day. That's a big bonus.
And I think that holds true for any aspect in life, or any pursuit that that you're going for. Is it has to be about more than just the money. And the people who are most successful at it are the people who are in it for more than just the money. Money is just a byproduct of you being good and efficient and passionate at what you're doing. I think that's a big thing, that a big misconception that newer investors have, is seeing all the upside that gets promoted and maybe not fully understanding the downside that comes with different strategies, or just investing in general. I do know another big problem that investors have is actually analyzing deals, understanding, how an investor thinks and how they have challenges and overcome them within a specific deal. Would you mind if we run through any one of your deals?
Yeah, yeah, yeah.
What kind of property is it and where is it located?
So yeah, again, there's a bunch of different properties we can go after. This one, we typically invest in the south of Edmonton, and the only reason for that is because that's where I grew up. Like I grew up in Sherwood Park, and then I moved to Riverbend, so it's kind of like southeast and southwest is where I feel the most comfortable or most educated, I guess. And it's the closest to where I live. So for managing and doing projects, that's always the easiest. But in this case, a wholesaler contacted me directly and said, "Hey, I have a lead on a home in the northwest of Edmonton, and it's a bungalow. You know, it was over 1,000 square feet. It had a decent yard, a double detached garage in the back, and a separate entrance so that you could suite it." So they already know kind of what I'm going after. Those are kind of the main criterias. The area wasn't like my first choice, but something that I could work with. And then he told me the price. It was like 255. I already knew that homes in that area I could make with my numbers to suite the houses, that if I'm, sub 300,000, it could work for me. So I wanted to go take a look at that. But yeah, my first thing is kind of have my criteria of what I want, and then trying to buy a home that I feel is undervalued for the area that it's in, but it also has potential to that I can add um, value to it. So you need you need to be able to say like, hey, there's a suited home in that area that sold for X. So we knew that, some were selling in that area for 460. This home was 255. Um, yeah, I guess I'm jumping into the numbers.
The next question will be, how did you find it? You already answered that. You said you got it
Yeah,
through a wholesaler. And then the next one is if you can run us through the numbers. So you started, so by
yeah.
all means.
Yeah, so and to go back, sorry, that we do buy deals like through the MLS, but we do find that the best deals are through wholesalers, or we have a separate system. So we have a website called quickhomebuyer.ca that we put a good amount of money into every month to generate off-market leads, and we typically find that those types of leads allow us to uh, have the most success on the back end of finishing our projects. And it's not because we're taking advantage of people or that wholesalers are taking advantage of people. It's a lot of these people just need something done quickly, or they don't want the advertising of everyone online knowing that their house is for sale. It's usually that they need to move on quickly, and that's where we buy cash. So then we can actually fulfill that need, and sometimes can get a discount with that. And I guess how I have my business set up is that the less people involved in a project, it allows us to have a higher back end of profit. So the less people involved, higher the profit, typically. So it also makes your it also makes it more risky to have less people involved. Your risk goes higher, but your profit could be higher there too. So we bought this house for 255,000. We did our renovations for 115,000. Um, and to put that out there, that's probably not a realistic expectation for most people to go and hire a contractor for 115. If you hear that number, I would probably run away and be like, that something's not adding up here. This contractor is too low, and that's not a good thing. The reason we can do that is because we have the team internally. It's all
All in
it's all in
house.
house.
Yeah.
So typically, a contractor will mark up their work 20 to 30%, and we get the benefit of saving on that. And then the other benefit that we have is that yeah, we bought from a wholesaler, so there's no extra realtor commissions involved. And then when we do these deals, they're purchased with cash. So there's no high interest lending rate and there's no mortgage penalty. That being said, we set up our deals so that everyone has an interest in the property. So the realtor or the person who's buying or finding the deal or selling the deal is getting a third of the profit. The contractor is working at cost but getting a third of the profit. And the money partner is putting in cash and making it quick and easy for us to get our job done, but they're getting a third of the profit. So the idea of that is that if everyone charges all these fees to get there, then at the end your profit's so small that if there's a little slip up somewhere, then there's no profit to be made, and the person putting the deal together gets stuck holding the bag and not making any money. So I like the idea of having my money partner, my realtor, and my contractor all have an interest in the property to say, I'm not going to charge any money for this project, and if the project makes $100,000, hey, that's more for everyone. But if it goes poor, well, I'm going to take a cut and everyone else will, but we're winning or losing together. That's just how we set up our deals. So back to the numbers. So 255 we purchased, 115 we renovated for, and then our we just had to pay for our property taxes, our legal fees, and some utilities, which typically comes in around $5,000 for us in one of those types of projects. That takes 5 to 6 months. And then so we were into that project for $380,000. So if we just stopped right there, to be into a legally suited home done to our spec for $380,000, we could rent the upstairs for $1,650 typically, and the basement for $1,350. So the home brings in about $3,000 a month. If you put that into a pro forma, that's a great return for a $380,000 investment, especially when the property, like we got an appraiser to come in and they're appraising that property at $460. Luckily, with the interest rates at the time and with house prices in Edmonton, but also the rental rates, it kind of creates this perfect storm for great cash flow in Edmonton, and that's what it's known for, or was known for before the interest rates went through the roof. So at the time, for us to either hold it, it's a great property, but for us to sell it for its new appraised value of $460, some investors could come in and have a property that's cash flowing like $700 a month, and you're having a mortgage pay down and potential appreciation and low vacancy and low maintenance. So we ended up selling the property when we were done, so for $460, and we had the connection for the end buyer. So there's about $85,000 of profit in that specific deal. We were fortunate enough that we have the realtor aspect or the buying selling aspect covered, the contractor aspect, and the money covered. So if I'm just to tell people we did a flip like this and it's an $85,000 return, that's not typically, that's not a realistic expectation, because we're doing it all in-house. And I think that it's not unfair to say that this isn't an unrealistic set of numbers that someone else can achieve, but they have to bring the value in all those areas. But let's say we do a deal, and we've done this many times, and we want to meet more people who would team up with us. So let's say there's someone out there who wants to bring the money to one of our deals, or they want to be, a contractor reaches out to us and wants to do a deal together, or a realtor, a wholesaler who finds a great house. If you're taking on one of those parts of the deal, then the 85,000 kind of gets broken up, 3 ways, and I think it's just over $28,000, right? So $28,000 could go to the realtor front end, and $28,000 profit to your contractor, and then $28,000 to your money partner, and those are still good numbers for each player. And then it also lessens your risk, because if things didn't go well, I would be stuck having to pay all that stuff.
Yeah.
But you can go even further and have the money partner, if they get a third of the profit, there could be like 5 money partners in there. So they're going to make less money, but then it's mitigating those risks. But that's just typically how we have our deals set up, so that if the flip goes well, okay, we make a profit. If it doesn't go quite as well, let's say we couldn't sell it, then we have a good rental property. But the last thing that I would want to happen, and I do see it, it's a common thing these days, where some kind of real estate investor is out there and then they go hire a real estate agent, they hire a contractor, and they're paying a high interest lending rate and mortgage penalties, and then they're going, how come I'm not making any money?
Yeah.
How come there's no money left in this deal? Well, everyone else is getting paid. You're just not paying yourself. So maybe we need to renegotiate or set up how your terms of the deal are set up. Restructure that deal, or maybe you need to bring more value. Maybe you need to be the wholesaler, or you need to be the money lender, or you need to be the contractor to maximize those profits.
I like that setup because your contractors also incentivized to stick to the timeline. Everyone on the team wants to get it done, because if everyone does their job good enough, then everyone wins. Whereas if you're just getting paid regardless, then
Yeah.
your motivation is not at the same level, you know?
Well, let's say I'm a realtor and I just get paid if it closes. Well, I'm more likely to tell my client, hey, things aren't selling. We need to drop the price 10 grand.
Yeah.
Well, that 10 grand reduction really doesn't make a big difference for the real estate commission, but it makes a huge difference for that investor.
Yeah.
But it's very easy for the realtor to say, oh, we need to drop the price. Or it's easy for the contractor. I know some deals are set up where guys just hire a contractor at $50 an hour. And they go, oh, that's a fair rate. Well, the contractor goes, oh, yeah, the painting took an extra 2 days. I'm not saying like these guys are dirtbags trying to screw other people over. It's just that they don't have an incentive to
Yeah.
get it done cheaper, quicker, or to even be thinking that. When I used to pay guys hourly, it's like I would have to order extra baseboard because the guys weren't as careful with it. Or I'd have to order more flooring because they're going, oh, we have an extra box, whatever, throwing it in the garbage, or you know what I mean?
Yeah.
It doesn't affect them, and that's just human nature. So creating a team aspect is kind of how we set up our deals, and we found success with it. But it is tough to create that team sometimes.
What was the whole process like with regards to this deal? Were there any challenges, and how were you able to overcome them?
Yeah, I think there's challenges with every deal. The biggest one with this one in particular, I think, was staying on budget and on time, which goes back to kind of the process of having like an on-site manager, having an app, having a design done, having electrical drawings, having the right trades in place, having that stuff all figured out before you're just going into a job. Like I think how I used to approach jobs was I would say, oh, we have $100,000 to do renos. Okay, let's go do it. And it's kind of this like, just you hope it ends up there. Like I'm going to budget about 5 grand for windows and 5 grand for roof, and everyone budgets 5 grand for everything for each thing, right?
Yeah.
But if you don't actually have like a quote in hand, you can't really go off of that. So making sure that those systems work out. And then I guess the other challenge that I can think of for this particular job were the neighbors were elderly and just didn't like the idea of different people coming to the site and like the noise, and we had the bobcats outside and doing some stuff there. So making them happy, that's a big factor. And it might not be a big thing, but just showing up, with coffee the next day to the neighbors and being like, hey, sorry for the noise, or hey, take my phone number. If you ever, see some weird person on the property or something that you don't like going on the property, give me a call. Let me know what's going on, and appeasing the neighbors. Because I think at one point in time, I just was so focused on my own project that it didn't really matter what else was going on.
Yeah.
Where it actually goes a long way just to have the neighbors on your team to be like, hey, you don't want them throwing their garbage in your dumpster bin and like filling that up, or whatever,
Yeah.
making complaints with the city because you're making too much noise, or someone is lurking around on the site and trying to break in to steal something. If there's some extra eyes or ears
Yeah.
to help your project go, it can go a long way.
Yeah, definitely. Now, looking back on the deal, is there anything that you would have done differently? I mean, it seems like it worked out pretty well in the end, but was there anything you would have changed?
Yeah, I think just the pre-planning on that one. I think we have a better process now for the pre-planning and having good. It goes back to the timeline and the budget and a set of drawings. Even some trades, you kind of walk them through a site and say, this is what we're looking to do. And then they go, yeah, it should be about this much. And then once you go into the project and then they do it and then they go, oh, no, it's actually $3,000 more. Well, if we have like a set of drawings and material lists, and we get them to send us quotes of exactly what's going into the project, typically it just works out better where we don't have those unknowns or extras added onto the project at the end.
Okay. So, Nick, tell me, when you're not investing, what are some of your hobbies?
Um, well, I'm a married man with two young daughters, and so they take up a lot of my time. So yeah, hanging out with my family, my girls. I love music. I've played the drums for 20 years. So um, yeah, since having kids, I had to buy an electric drum kit so I can actually
Yeah,
put the
of course.
headphones on and play when it's nap time or whatever. And I'm a sports nut. I like kind of all sports, but my favorites are probably like playing are volleyball and golf. But I'm also an avid Oilers fan, so uh, I'm always watching all the Oilers news and all the games and stuff. So that takes up a lot of my time and my business. Yeah, I mean that's kind of speaks for itself, and any small business owner understands that.
Yeah, absolutely. Absolutely. Well, I guess lastly, could you let the listeners know where they could find out more about you? I will be sure to link all your info in the description as well.
Sure. Yeah, Instagram is probably our most up to date with like projects and things. So if you DM us, like add us on there, DM us. We have a YouTube channel, Clean Cut Real Estate, where we just talk about different things in the real estate world. And we also want to not only talk about investing, but also like on the contracting side, like different products that we use. So like flooring, LVP, like what are the pros, what are the cons, laminate flooring, different parts of when you're doing actually the construction in jobs, to go through some things like that, and also walk through the homes that we've renovated or are working on. So YouTube, Instagram, Facebook. We have an office in Edmonton, kind of off White Avenue and 50th Street. So you can come by, say hi. We'd love to meet more people and connect with more people in the real estate investing world.
Thank you so much for reaching out and coming on to the show. I've enjoyed getting to know you, and I'm sure the audience found value in this episode.
Perfect. Thanks for having me. And I hope to meet more of you guys out there. So thank you.
Thank you for tuning in to Building Wealth Through Real Estate. If you're interested in learning how you can go about fixing and flipping a property, as well as finding a joint venture partner, then you definitely want to check out the episode where I interview Cody Kelly. This is your host, Alray Noble, signing off.